This TFMR podcast is brought to you by Cyber Metals, a new digital precious metal platform from your friends at JM Bullion. Visit cybermetals.com for more details. Welcome back to your TF Metals Report podcast highlights for the week of May 16 through 20, 2022, a week that started with what might have been the final washout in COMEX gold, a raid early in the London session, about 7 o'clock London time, maybe 2 in the morning U.S. time, smashed price all the way down to $17.85, and then price recovered all day long, painting a nice-looking reversal candle on the chart. Would that reversal hold all week long? Well, we'll have that answer by Friday, but back on Monday, May the 16th, that was something we were talking about in our daily podcast. Again, big day tomorrow. And so here we are, finally, gold and silver. All right, RSI and gold now back up to 35, so still deeply oversold. That's a hell of a beautiful looking reversal candle today with that big tail hanging down, closing up on the day. Great. Is it a reversal? I don't know. Question mark, question mark, question mark. Go back to the end of April. We'd come down for 2 weeks in a row, dropped below 1880, and then reversed with a hammer thingy and traded up to 1920 the next day. Was that the reversal? Nope. The following week, we plunged 1860. Hey, that looks like maybe a reversal. Rallied up above 1900 after the Fed. Looking good. Was it? Nope. Just last week, back on Wednesday, almost an engulfing candle coming from 1835 back up to 1850. Was that a reversal? Nope. So will it be this time? It remains to be seen. Again, check with me tomorrow at this time. We get above this trend line, maybe more importantly, 1840, 18, and then 1860. Yeah, we may be on to something. But for now, the jury's still out. Tuesday, May the 17th, a number of things Fed doesn't know if they're coming or going in many instances. And on Tuesday, Chairman Powell had an interview with the Wall Street Journal where he contradicted himself over a matter of just a couple of minutes. Of course, there were no follow-up questions pointing that out, but we sure caught it at TF Metals Report. I put these two together on a little, a word page. So this came out first, and you saw these two on one of those 3 pages, those 3 screenshots I just kind of jumped through. Fed's Powell, if we have to go past neutral, we won't hesitate. 1 minute prior to that, Fed's Powell, we don't know where the neutral rate is or where tight is. So wait a second. First you said you don't know where neutral is or where it is. And then a minute later you said, but if we have to go past neutral, we won't hesitate. And then there's this doozy 21 minutes later. Right now, this says natural, but that's a typo. Right now, the neutral rate is well above 3.6%. Wait a second. Time out. Fuck. This is madness. Let me walk you through this again. Let's just say, again, the first comment out of his mouth in this regard, we don't know where neutral is or where tight is, whatever that means. I guess where financial conditions become tight. Then just 1 minute later, after saying he doesn't know where neutral is, he says, we'll go past it and we won't hesitate. What? We don't know where the cliff is, but we're going to go past it. That doesn't even make any sense. And then within 21 minutes later, here comes another one. Right now, it feels like the neutral rate is well above 3.6%. Well, you just said 22 minutes ago that you didn't know where it was. Ah! My God. And this is what drives markets. Oh my God. Fundamentals? Screw it. Who needs them? The Fed and the eventual Powell pivot. We keep a close eye on the stock market too. It was a crashing stock market in the fourth quarter of 2018 that drove Powell pivot number 1. It'll be a crashing stock market now that will drive Powell pivot number 2. We have to get there eventually. How far low will the stock market go? Well, we've been targeting about 3,500 on the S&P now for our last couple of months. And we're certainly headed in that direction. That's one of the things we talked about on Wednesday, May 18th. And then on the monthly chart, you've seen me show you this lots of times now. It's going back 8 or 9 years. Remember I mentioned how early 2016 was a problematic time for the market, bouncing from very near the 200-week moving average. You know what happened. The Fed was talking. If you remember back in the day, the Fed was, the economy's great. We're going to keep hiking rates. And we were all over it, watching the jobs report come in and flat to negative, all these lies. And that was when the GDX went from 100 to 250 or whatever from January to August, right? Okay. Late 2018, coming down, breaking that support at 2,600, falling all the way to 2,300 and the 200-week, COVID crisis, bang, even falling below before reversing and getting back above. So I don't see how and why at the end of this, we are not somewhere near that 200-week moving average. You could probably make a case for 3,400, that peak before the COVID sell-off began in early 2020. You could even make a case for 3,200, where it fell back twice in the fall of 2020 before soaring to 4,800. Somewhere between 3,500 and 3,200. I know that's a wide range, okay? But that's about how far below the 200-week the S&P fell back in early 2020. So anyway, worst case scenario, 3,200. More likely 3,400, 3,500. And then you'll finally get Powell Pivot 2. Let's get it on. Let's get it over with. May 19th, for another interesting day in COMEX Gold. With the bounce continuing, eventually we knew we were going to run into the 200-day moving average, and we did. And man, oh man, was there a fight for that level. We got speculators trying to buy and cover. We got the banks obviously trying to keep price down. Don't want price getting back above that key technical level because that might engender more spec buying. So we had a fight. The fight would continue through the rest of the week, but you could sure see that on the intraday chart on Thursday, and that was one of the things we discussed that day. The 200-day moving average, 1840 and 70 cents, roughly where I drew this purple line. You can see how price was capped through the PM fix, 9 o'clock Central this morning. Got through, went to 1845, came back, tested the 200-day support. Half hour later. Then went to 1848. And then the first thing I want you to notice, straight down. These are 2-minute candlesticks. So over a course of 1, 2, 3, 4, 5, 6, 7, 8 candles, 15 minutes. Price goes from 1848 to 1839 and back under the 200-day. Then it spends basically an hour and a half going sideways, mostly above the 200-day. Then the next thing I want you to look at is then the plunge in 8 minutes from 1843 to 1839, right at the COMEX close, blowing out price and getting it back under the 200-day moving average. Then going sideways for 2 hours in a $1 range under the 200-day moving average. And then, like I said, as I record this right now, 4:12 Eastern Time, 48 minutes to go in the Globex session, I've got 1839.80. Can't make this shit up, man. Really just remarkable. Really is. Whatever. And on Friday, May the 20th, COMEX Gold continued to battle its 200-day moving average, oscillating back and forth around that key technical level all day long. Finally finishing about $1 above that level when the COMEX closed at 1:30 Eastern. It did also actually manage to paint a green candle on the weekly chart, as you can see in your final chart of the week. That's our first green candle in the last 5 weeks. 4 straight red candles driving price lower, but a nice looking reversal this week, getting back above the seemingly important 50-week moving average as well. And now we'll wait to see what happens next week. Very busy week next week from an economic standpoint, durable goods, the latest FOMC minutes, and then we'll wrap up next Friday the 27th with the June gold contract going off the board. That's always a volatile period, but a lot of additional inflation data, core PCE, and also personal income and spending data next Friday before a 3-day U.S. market holiday weekend. So it's going to be a very busy week next. We hope to have you join us at TF Metals Report. Best way you can stay on top of things, not only in gold and silver, but in the whole macro environment. world news and events as well. Again, tfmetalsreport.com. Thank you for listening to your weekly podcast highlights.